sticking point when it comes to the main residence exemption relates to choosing to treat a dwelling that was a taxpayer's main residence as continuing to be their main dwelling during an absence in accordance with section 118-145. Nick is an IT software analyst working in Melbourne and has received a promotion that requires him to move to Sydney. Nick has lived in his unit in an inner Melbourne suburb for 3 years, and this is his main residence. Upon moving to Sydney, Nick rents an apartment close to his new office and rents out his Melbourne unit for 5 years. His unit is then occupied rent-free by his sister for a further 4 years, before Nick decides to sell it and purchase a property in Sydney. During the 9-year period of absence from his main residence, Nick has not claimed any other dwelling as his main residence. What we need to consider is whether Nick's absence period has exceeded 6 years whilst earning assessable income on the main residence. So Nick only received assessable rental income for a 5-year period as his sister did not pay rent. Therefore, the unit is still deemed to be his exempt main residence, as the absence period whilst earning assessable income does not exceed 6 years. Consequently, he may disregard any capital gain or loss on disposal. Now, let's consider what would happen if after the 5-year period, Nick instead returned and reoccupied his Melbourne dwelling as his main residence, but then left again to relocate to Adelaide for work. If Nick rents out his unit for the 4 years while he is in Adelaide and then decides to sell, he can still claim the absence exemption. This is because the exemption for a 6-year period whilst earning assessable income resets when Nick returns to live in his main residence. And of course, the exemption period remains indefinitely if the residence is not used to earn income. That is, if Nick's sister was to stay there rent-free. Fiona acquired a dwelling in Melbourne on the 1st of May 2000, which she initially rented out, but then occupied as her main residence after 1 year on the 1st of May 2001. On the 1st of May 2005, she moves to Perth. She rents out her Melbourne dwelling and buys a new dwelling in Perth. On the 30th of April 2016, she sells her Melbourne dwelling. Fiona can elect to treat her Melbourne dwelling as her main residence throughout her absence, so long as she does not claim her Perth dwelling at the same time. Fiona will evidence her choice by the way she completes her tax return for the year of disposal. So if she elects for her Melbourne dwelling to be her main residence until its sale, then she calculates her net capital gain by treating the first 6 years of absence as exempt. The proportion of the capital gain or loss that is disregarded is based on the number of days the Melbourne dwelling was used or deemed as her main residence. So the exempt days are from the 1st of May 2001 to the 30th of April 2011, noting that the 30th of April 2011 is 6 years after she moved out on the 1st of May 2005 and started earning assessable income on the property. So the actual main residence days are 1,460. The deemed main residence days are the first 6 years Fiona was absent, which is 2,191 days. The total ownership period is from the 1st of May 2000 to the 30th of April 2016 when Fiona sold the property. This is 5,843 days. So the proportion of the capital gain disregarded is worked out by dividing the total exempt days of 3,651 by the total ownership period. This is 0.625 or 62.5%, and therefore 62.5% of any capital gain or loss will be disregarded.